Good morning. This is Larry McMillan with a stock market comment on Monday morning, February 1st. The first month of the year is in the books and it ended quite mixed. We're seeing some sell signals appearing and even some weakness now in the S&P chart. Having said that, there's a fairly large rally taking place tonight, Sunday night, and it is still the end of the month, bullish seasonal period, which lasts really through the third of the month. But the S&P chart did close below 37.25 on Friday, and that's a negative. It looks like it's going to regain that level today. The really negative level, though, is 36.30. And closing below 37.25, might cause you to, like I said, go flat, get out of some of your longs, but I wouldn't go short yet at that point. 36.30 would be more the point to do that. Moving on to other indicators, the book call ratios are still rather flat. These, especially the standard ratio, is still moving sideways, so nothing particular there. The weighted ratio did pick up after Friday's large sell-off, though, and has started to move upward. So another day or two of sharp upward move like that by the weighted ratio will definitely qualify that as a sell signal. Breadth oscillators are both on sell signals right now, and even though breadth was pretty bad on Friday, they have not gotten down to oversold territory yet, so they're still on those sell signals. Cumulative breadth has not made a new high for about a week and a half, although cumulative volume breadth did. So that's a kind of hidden positive factor in the market right now. New lows continue to bump along at almost zero. So new highs are still higher than new lows, but new highs have lost most of their power too. So on Friday, there were about 50 new highs on the NYSE and 5 new lows. That indicator would turn negative if new lows could start to accelerate and pass new highs. But if it just becomes, a modest increase in new lows, that won't really do it for a sell signal. VIX had a big week last week. It was up huge on Wednesday, pulled back a little, and then up again on Friday. However, that movement did create a spike peak buy signal. And they're sometimes, contrary to the trend, but right now it's still in effect. And VIX is down this morning with the market rallying. So that sell signal is still good until VIX gets back and closes back above, let's say, 34 or so. The term structure of the VIX futures, however, is hovering right on a negative mode. The February futures are last week did trade slightly higher than the March futures on occasion, but not by a lot. And this morning they're about equal. But after that, the term structure starts to slope downward again. And so if the front month accelerates and gets ahead of the second month and the term structure is still sloping downward, which I'm sure it would be, that would be quite negative. So that's definitely something we're keeping an eye on. So overall, there's a lot more negative signals than there have been recently. We are, as I mentioned, still in that January positive seasonal period, but that's going to end on February 3rd. How much of this was affected by the short squeezes that were taking place on the hedge funds, perhaps forcing them to sell out some profitable longs to, cover margin calls on their shorts? I have no idea. But, we can only look at the technicals, and the technicals are weakening right now. So as long as SPX is above 36.30, I don't think you want to be completely 100% short, but you can certainly have a number of bearish positions in place based on the sell signals that are out there. I invite you to visit our website, subscribe to our newsletters where we keep tabs on all these things daily. Meanwhile, good luck and good trading.